Hi, this is Sherry Darden, the business plan lady, and I'm here to talk about your coffee break small business tip for the day. And one of the most burning questions that I get is, Sherry, how do I write off the miles that I drive in my car for my business? How do I write those miles off? Well, you've got two ways that you can write off the miles that you drive in your own vehicle for your business. The first one is called standard mileage rate, and that simply means the IRS, depending on the year that you're writing the business activity off, they will give you a standard rate. And so you simply keep a log of the number of miles that you drive in your car for business, multiply it times that standard rate, and that's the amount that the IRS gives you to write off for your business for that year. So let's just say, for simplicity reasons, this year it's 50 cents. So if you keep tabs, and that's the key thing, that you keep tabs, and what you really need to have is a mileage logbook that keeps tabs of the number of miles that you drive and the purpose for that business expedition, if you will. So you need to have the date, the nature of the business travel, and the number of miles. So you're going to total all of those up between January 1 to December 31st of that year. And let's say that it's 6,000 miles. So 6,000 miles times 50 cents is going to give you what? Right, $3,000. And that's what you're going to be able to take and write off for your car for your business. Now, the other is called percentage business use. And here's what that means. You still have to keep tabs of the number of miles that you drive for your car. But let's just say, for ease purposes today, that you buy a brand new car and it's got 9 miles on it. And December 31st, you take a look at that odometer and it has 6,009 miles. That means you've got a total of 6,000 miles for that year. And again, you're keeping that mileage logbook of the date, the nature of the business, and the number of miles that you drove for that business venture. And let's say throughout that 12 months, again, let's go back to 3,000 miles. So now you've got 50% of the miles that were driven in that vehicle were for business. So now you've got your percentage, and again, I'm merely using this as an example. You're going to come up with your percentage. So now we've come to 50%. So now what that means is 50% of all of the gas, oil changes, tire rotations, car repairs, insurance, all of the costs that you incur during that 12-month period that you are having out of your pocket is now going to be a write-off. So let's say between gas and oil changes and tire rotations and other types of repairs and car insurance and all that good stuff, let's say it comes to $10,000 for the year. Remember, your percentage use was 50% for example purposes. So now that means 50% of that $10,000 is now going to be able to be written off. Both of those are going to require you to have a mileage logbook. There are two questions that the IRS asks when you're wanting to write your expense off for your vehicle, for your business. Is one, do you have evidence of that? You've got your mileage logbook. Two, do you have evidence of this in writing? That's why you've got to have your mileage logbook. And let me just say, going back to the percentage use, that does mean, yes, if you want to write off 50% of all the costs that you incurred to operate that vehicle, you have to have receipts. So every gas receipt, every oil change, every toll charge, got to have backup for it. Which one is going to be better? Can't tell you that. It all really depends on how much you use your vehicle for your business. Either way, you have to start off again with just the basic mileage diary. The date, the nature of the business, and the number of miles that you have driven. Now, let me just say, you can use standard mileage, but once you choose the percentage business use, You must maintain that same method until you replace that car. You can go from standard mileage to percentage business use because maybe you've just started your business and let's say you only use it 10% of the time, so standard mileage is going to work. But year two, business is booming and you're pretty much living in your car for your business. Then you probably have a better tax advantage of using the percentage use. So you can go from standard to percentage use, but once you go to the percentage business use, you must remain using that method. I would like to say you're stuck until you replace that vehicle where you can use a different method. So I hope that's been a great, great, great tip for you. So if you haven't been keeping a mileage logbook, maybe it's good time to go to Office Depot or Office Max or Staples or somewhere and get that mileage book, put it in your glove compartment, and make a habit of putting the date, the nature of the business, and the number of miles used. It's a great, great tax write-off for your small business, so you don't want to lose it by not having documentation. I hope that this has been a really, really good tip for you. If you got any questions or comments, go ahead and leave a comment down there at the bottom and I'll try and get back with you just as soon as I can. If you've got any other small business questions you'd like for me to address, go ahead and drop me a note with that as well. This is Sherry Darden, the Business Plan Lady, with your coffee break business tip. Hope to see you soon, and bye for now.